Hey guys, welcome back to the topic 4. So we are going to talk about margin trading. So this is a margin trading tutorial. So if you are not subscribed to the channel, kindly hit the subscribe button, turn on post notification and leave a thumbs up to this video and let's get started. So for you guys who do not know what is margin trading, is basically you are able to trade and after that your capital is going to be enlarged if you're going to do margin trading, and of course there's lots of risk involved, so it is a high risk activity. So if you do not know what you're doing, do not do it. And of course this tutorial I'm just going to briefly tell you what is all the basics about margin trading. And of course, to be honest, I do not actually use the margin trading feature because I would rather use the leverage trading, which is a much more higher risk. But for the margin, I'm doing a tutorial, therefore I'm going to talk about what is this margin trading all about. So I'm going to tell you about the interface. So over here you can see on the margin trading tab itself, so you will need to head over to the trade and after that click on margin, and after that you'll be redirected to this page, and over here you can see the cross and the isolate 10 times, and after that over here your leverage is up to 5 times. So over here you can see I have a balance of 0.015 Bitcoin, and if you want to transfer your margin, your balance onto your margin account, just click on the transfer option and spot towards the margin account. So over here I'm going to show you. So over here you can see I have already transferred some funds over here, which is 0.005 Bitcoin, and after that you can see over here on the tab itself I have 0.015, which is 5 times of the amount that I'm having. Therefore, if you want to, you can just transfer from your spot account towards the margin, and once you have input the amount, just click on confirm, and after that the funds is gonna show up over here. And over here, for margin trading itself, you are able to basically borrow funds, and after that you need to repay the funds, and of course there's a fee involved on the margin trading, and after that I'm going to show you the fees. So over here you can see the fees over here. For Bitcoin itself, if you're going to borrow Bitcoin, the fees is going to be 0.03 the interest is daily interest, and after that the yearly is at 10.95. And let's say you have deposited Bitcoin, and after that you want to hedge your Bitcoin towards Ethereum. So basically what you're doing is you are using your Bitcoin as collateral, and after that you are going to receive Ethereum. So how can you do that? It's just simply over here, just click on the borrow tab, and after that here you can choose the coin to borrow, which is Ethereum. So just click on Ethereum, and after that over here they can tell it's going to show you the hourly interest, and after that you have borrowed none, so it's going to show you borrowed 0, and after that the maximum amount of Ethereum that you can borrow. So over here, so example you put in 0.1 and you click on confirm, and after that you are basically onto you're borrowing funds from Binance and you're using your Bitcoin as collateral. So you just click on confirm, and after that yeah, basically you can trade with your Ethereum towards Bitcoin trading pair because you're using your Bitcoin as collateral. So what you want to do over here is click over, enter Bitcoin / Ethereum. Just click on this Ethereum towards Bitcoin, and after that over here you are going to do some trades, and of course to generate more Bitcoin because you will need to pay off your loans that you have used, because basically you have loan 0.1, and after that you will need to repay it depending on the rates itself. So the hourly rates as shown, it is around this percentage 0.001, and after that you will need to make more than 0.1 Ethereum to pay off the loan. And of course, the longer you hold it, and after that over here they show you the Ethereum rate is at 0.025 per day, and after that per year is 9.12. Therefore you need to make more than, I would say, 0.1% within a day to repay the loan. So this is a bit complicated, and of course for the collateral wise, and we are going to talk about the collateral. So over here you use let's say you are going to use Bitcoin as your collateral, you just head over to transfer and you can choose the coins that you want. So let's say you are having US Tether, you can use your US Tether as collateral. Just click on the spot towards the transfer option over here, just click on transfer, and these are the coin that you can use as collateral, basically lots of coin. And after that, let's say the US Tether is the main pair we are going to talk about. So over here US Tether, just input the amount of US Tether you want to use as collateral and click on transfer, and once it's confirmed you'll see the funds appearing over here as this amount of US Tether that you can basically you can use up to 5 times of your, let's say you only have $100 as collateral, you can borrow up to $500 worth of funds in the margin trade. So over here, just click on borrow, and after that, using your US dollar, you are able to use borrow as shown on your tab. If you put in $100, it's going to show you how much you can borrow for maximum. Just click on the amount that you want to borrow and confirm, and once you have done it, just basically trade away to pay off whatever is being borrowed, and after that you will need to sell off to repay. So let's say you have borrowed, and after that 0.1, for example, this step over here is going to show you 0.1, and of course there's lots of risk involved with it because of liquidation. So I'm going to show you what is the liquidation risk. So over here, this is an example using the cross and after that the isolate. So over here on the tab itself, you can see cross 3x and after that isolate as 10x. So basically, what's the difference? And after that, how can it benefit you if you're going to use the margin trade? So for the example, day one, the market of Ethereum is at $200 while Bitcoin Cash is at 200 US dollar. User A and user B transfer $400 into their respective margin account as margin balance and purchase Ethereum and Bitcoin Cash with 5 times leverage on average, and after that, example, user A traded in cross mode while user B traded in isolate. So over here you can see user A, basically what is cross is using your whole wallet as collateral, and after that, if either one of the assets that you have borrowed is let's say the price fallen, and after that the other one will like rise in value. So example, we can look at the day 5 example over here. Ethereum price decreased to $220, and after that Bitcoin Cash price dropped to 120, provided that both users did not add any margin. So here you can see the scenario on day 1, both borrowed 5 Ethereum, 5 Bitcoin using 400 as collateral, and after that user B used 500, used $200 to get 5 Ethereum and $200 to get 5 Bitcoin Cash using the isolate mode. So basically, the meaning of cross is using your whole wallet as collateral, and for isolate is paying upfront. I would say using an upfront amount for you to use the collateral, and after that, if any situation, the day 3 situation, Ethereum price rose up to $230, and after that Bitcoin Cash fall to 180. You can see over here the margin level and the liquidation is at 1.28 for cross mode, and after that for scenario B, the user B itself, over here you can see that the normal profit is at 150 for the Ethereum's tab itself, but for Bitcoin Cash itself, there's a margin call triggered, and after that the user must add more margin to prevent liquidation, because at the 1.1 mark itself, if the margin level hits 1.1, your position will be liquidated, and after that whatever you borrow from Binance, they're going to sell it off on market, and after that you will lose the funds. And after that, let's say on the fifth day, price of Ethereum decreased to 220, and after that, while Bitcoin Cash dropped to 120, provided both users did not add any margin. So over here you can see user A did not do anything about it, and after that over here you can see it is at 1.06 and there's a margin call, and after that he has to pay to add on more margin, because over here this situation he is losing whatever funds and not making any profits or even break even. But for user B, for using the isolate of 5 Ethereum, he has around $100 US dollar in profit, and sadly, but for Bitcoin Cash itself, it has been liquidated. So this guy roughly lost around $100, instead of this guy that is about to lose every single money on his account. So this is the risk involved. So I would say if you can't take this high risk activity, it is not advisable for you to borrow and after that trade on margin. So we are going to talk about the guide over here. Over here on Binance Academy, there's a whole guide talking about what is the margin trading all about. So at first you need to open up an account, and you have to complete a KYC and have your 2FA enabled. And after that, you need to transfer funds and stuff like this. So we are going to talk about the margin level. So over here you can see the margin level, it is at 1.5 towards 1.1. So if it hits below 1.1, your position will be automatically liquidated, and after that you have to pay a fee for liquidation. So take note of that. And after that, how to trade on margin, the same thing. So we are going to talk about the topic 4.3. So over here on the topic 4.3, we are going to talk about borrow, repay, and trade. So how do you borrow first? So let's say you are going to trade in Ethereum and you are using US Tether as your collateral. Just head over here and borrow some Ethereum. And after that, once you enter the amount you want to borrow, just click on confirm. And after that, over here, you can once you have the funds being being borrowed for you, you can just head over here to the trading tab. Either you choose the 3 times or isolate, and after that execute the trades, and after that trade your way to make back to repay the amount. Let's say you have already done some trading, and after that your current capital is at 0.11 Ethereum. You can choose to repay it. Just head over to the repay tab, and after that enter just head over to your account. So over here just click on margin, and after that just go down to repay. Over here just click on repay. Let's say you're going to repay Ethereum. It's going to show you your available balance right now and the interest per hour. And after that the assets you borrow. So example, you borrow 0.1, and after that it's going to show you 0.1 over here, and after that the interest, let's say, is at 0.001, and after that you have a balance of 0.11, and it is going to tell you the total amount you need to pay. Just click on confirm repayment and you are good to, basically you owe Binance no funds, and after that you make the difference and you earn the money on your trades itself. So very simple. So basically if you want to trade, it's just using the tab over here, cross isolate, borrow the funds that you want to trade, and after that click on the trading pair. So example, you use US Tether as your collateral. Basically over here you just head over to the Ethereum to US Tether, and after that you can just, whatever funds you have, you just click on sell, and after that, yeah, basically use the borrowed funds to trade your way up, and after that increase your capital, and from there repay it timely, and of course do not hit the liquidation. So once you've done it, you can, so example, what is margin trade for? Example, Alice believes the price of Binance will go up, so she wants to open a leverage long position on Binance BNB. To do so, she will need to first trade funds to her margin, and after that borrow Bitcoin, and after that next Alice uses the borrowed Bitcoin to buy BNB. So for this case, for you guys, is you are using US Tether as collateral, and after that you're gonna borrow example, you're going to trade Bitcoin, you can borrow Bitcoin, and after that you can buy BNB. If not, Ethereum, and after that if the price of BNB goes up as you expected, you can sell your assets, and after that repay the borrow amount, which is Ethereum, along with the corresponding interest, and any leftover of the trade will be your profits. And after that, yeah, basically this way, for margin itself, I would say you will need quite a huge amount of capital before you get started, because using it as collateral you will need a larger base funds, and after that from there you can increase your capital up to 10 times, if not 5 times, on depending on the trade you are going to do. So if you want to learn more, just head over to the Binance website and click on the margin tutorial, and after that I'm going to link this Binance Academy page over here, so you can watch the video, and after that it is a complete guide, and after that it's going to take around 6 minutes for you to finish the read. And of course they have a video which is around 5 minutes long for you to learn about Binance trading. Yep, so it's 5 minutes and 17 seconds, you can watch it, and after that hopefully at the end of this tutorial you have done, you understand more about margins. So I would say why you want to use margin trading instead of leverage trading in the next topic. So yeah, if you like the video, kindly hit the subscribe button, turn on post notification, and leave a thumbs up to this video. And of course I'm going to see you on topic 5. Peace. See you.